A lot of people overcomplicate ICT concepts and day trading, but in today's video, I'm going to show you how simple it can really be. I'm going to quickly go over 2 examples of winning trades I took just today using my model, and I'm going to cover how I incorporate draw and liquidity, inversion fair value gaps, liquidity sweeps, and higher time frame PD arrays to consistently nail moves in my direction. So without further ado, let's get right into it. So the first trade I took was actually an Asia session trade. So basically Sunday evening. It was technically yesterday, but they count it all under the same day on Top Step. So this was the Asia session trade short that I took. So as you can see, we had a fair value gap that we created right before the close on Friday. And then once futures opened yesterday, we kind of chopped around above this. And then we get the inversion right here at this 19 candle, as you can see. So the minute we closed that candle below, I already knew that I wanted to short this. Now, I don't just short anytime I see an obvious inversion fair value gap. There has to be a reason I'm actually expecting the inversion to follow through, right? Because you can have many inversions like this, and you'll see that maybe we'll just wick right back up and continue upwards, and you'll wonder, oh, I thought inversion fair value gaps were supposed to give us a good reversal. Why didn't it continue? Well, it's probably because there wasn't a good enough draw on liquidity. So that takes me to my next piece. Because by the time we had inverted this gap, I already knew I was looking to short. So if you go to the daily chart right here, you can see that we were essentially just rebalancing into a daily bullish fair value gap that we had made last week. Okay, and I'll mark it out. Now you can see this daily candle has closed now. So we've already wicked all the way down into it. But mind you, when I entered the trade, we were like up here towards the top of this daily range. And I was targeting a move down to this daily bullish gap, right? So if you look at the 15-minute chart, when I entered right here, we had a decent ways down to go, right? And it ended up being a pretty good, about 2 to 1 hour trade because I was going to stop out, as always, on a close above this inversion level, okay? So it ended up being just over 2 to 1. But the first trim I actually took was the Friday low of day. So I'm going to show you guys right here. This is where I trimmed my first contract, my first NQ contract, and I also set my stop to break even on the remainder of my position, right? The reason I want to trim at a daily low like this, even though we're already pretty close to the daily bullish gap, right? Like right here, you can see this is the low that coincides with the daily bullish gap. So, you know, that's the Thanksgiving low. We didn't really do any actual price action on Thanksgiving. We just chopped, but I hope you all had a happy Thanksgiving, by the way. But the reason I want to trim when we get to a low like this is because sometimes we will just chop back around and then make our way down to this daily bullish gap a bit later, right? It's a strong draw on liquidity, but you can see weird things happen on low volume and Asia session, especially when we just take out a previous day's low. So I wanted to make sure that I was taking off some risk and realizing some gains at that level, which I did, and it ended up being, you know, well, we ran to the final TP after that, but I'll never regret playing it safe, moving stop, whatever, right? And at least we didn't get broken even, right? We actually just ended up, you know, why is it saying we're going maintenance? All right, cool. But yeah, it didn't end up affecting anything, right? We end up getting the short. We're moving down. We take out previous day low. That was my first target. And then we end up hitting the daily bullish imbalance. And as you can see today, we got a fairly positive reaction to the upside off of that imbalance, right? So it all goes together. Now, the other reason I really liked this short was because we also had taken out a swing high inside of a bearish 15, right? And then we also had, if you look at the 1 hour, we had a bearish 1 hour gap here. Now, I believe it was on the 2 hour chart as well on TradingView, but for whatever reason, I can't set up my 2 hour on Top Step. I don't really know why. But we had this 1 hour bearish gap, as you guys can see, right near the top of this previous range, which is a very, you know, balanced range. So you can expect some rejections out of that. And we end up tapping into this 1 hour bear gap, and boom, we end up selling off. And that was another confluence when I saw the 15-minute, when I saw futures, you know, open Sunday night, tap into this gap and start rejecting. That was another confluence to really take this short. So I call my model the STIM model, right? You want to sweep, tap, inversion, momentum. There was not a super clear liquidity sweep here, but we did get a tap into a higher time frame gap. We did get an inversion with momentum, and most importantly, we had a very, very clear target, right? We needed to trade back into this daily bullish gap that I keep mentioning because that's how the market works, right? The market moves in waves. It's not ever going to be straight up. It's never going to be straight down. And so to continue upward after 1, 2, 3, 4, 5, don't even count Thanksgiving, 5 green days in a row, actually, you're going to need some type of pullback if you want to continue that trend. And I believe that's what we got today. Right now, I'm not some, macro time frame trader, so I don't really know if this is the end of it or if we're going to keep selling off. But all I know is that it was a great spot to target for shorts. And then that brings me to my second trade. And I apologize, this keeps flashing towards the top that they're undergoing maintenance as if I don't know. Like, bro, all good. I'm not trying to trade right now. We can't even trade. It's 5:02 Eastern, which means that the market for futures is closed. But let's get into this second trade right here, okay? So on NQ, I had a second trade that I took. Now, as you can see, I used the 30-second for this. We're on the 30-second chart. But remember, guys, my entire thesis was that we needed to trade back down into this daily bullish gap, which I still have marked in gray here. I'm going to delete it now, but you guys know that when I was looking for a long this morning, we were inside a daily bullish gap, right? That was the reason I targeted shorts to that gap overnight. And now that we're in the gap, I can expect some type of bounce, right? So this morning, I better not see this maintenance message again. This morning, we end up coming down, right? And we're still towards the lows of the range. And we make this aggressive move down at about 9:30, 9:45. And I noticed that we take out this swing low from the morning, okay? Now, ES does not. There's an SMT. I actually just like trading NQ better. So even if there's an SMT, I know you're supposed to trade the leading index. I just put them side by side and exit accordingly if there becomes an SMT at my target. But the reason I wanted longs here, okay, was because we had a lot of low resistance buy side liquidity, right? So if you look, all of these highs are collected in this area and none took the previous out. So they're all going to act as a magnet, right? And you can notice we even came up in the morning before I took this long and didn't take any of the previous significant swing highs out. Now, the best reason also for this trade, and I'm going to go to the 1 hour chart to show you, is that we had a bearish 1 hour gap that we needed to rebalance towards. Okay, so as you can see, overnight we created, obviously that was part of the move that happened when I shorted. We created this bearish 1 hour gap. And we can also tell that since we never took out any of the highs, we had not tested it yet this morning, right? We kept on coming close, generating a ton, and you can even see it now on the 1 hour chart. It's very evident, a ton of buy side liquidity, okay? And then we also needed to rebalance. So we manipulate in the morning. We take out this internal low that I marked, right? We have an SMT with ES because we never actually take out the overnight low, but we take out this internal low. We have all of this low resistance buy side above us, and then we have a 30-second inversion, right? So to me, the reaction off of that internal low makes me not even need to take out the overnight low, right? I think that's the London low. And I didn't even need to see that taken anymore. The reason is we're in a daily bullish imbalance, so we have a very strong bull bias case. We've taken out an internal low and reacted very positively to it. And then we've also shown an SMT with ES, which proved there was strength in the market. So with all those factors combined, I went long here, ended up just targeting this swing high right here. And then I initially took, most of the position off there. But my final target was obviously this 1 hour bearish gap. And I ended up hitting it pretty easily, right? We ended up running up pretty quickly. Now, this is another long you could have taken right here, right? With my model, I was off for the day. I had 2 winning trades. I usually only take 1 trade, but if one's in Asia and then I go to bed right after it hits and then I take another one in the morning in New York, like I will do that. So the 1 trade a day rule doesn't really apply if I have a first successful trade in Asia. Now, if my Asia trade sucks and I don't, make money or whatever, then I might not trade New York that day. It just depends. But this is just the model that I'm trying to show you guys to prove and to keep kind of showing you how successful it is. Right here, you can see we're delivering off of a higher time frame PD array. It's very obvious on the 30-second chart that it's a bunch of stacked candles. So we know that's going to be a fair value gap, a bullish one on the 1, 2, maybe 3 or 5 minute chart. And then you can see we take out, this internal low, this internal low, this internal low, all these internal lows. You can see we have generated some buy side liquidity up here again. Then look, we end up making this dip down. Boom, create a bearish fair value gap on the way down invert it right here, long, and you end up hitting new range highs and several new highs of day. So it's like clockwork, guys. I'm telling you, this model just does not fail me. Of course, that's an exaggeration. There'll be times where it doesn't work, but the end goal of this model is just to get consistent results. It's not to win every trade. Your goal should never be to win every trade. As long as you can find an edge for yourself by back testing, by proving it, even by coding, if you want to do some statistical equations to figure out like what environments your stuff works the best in, all those things that I don't really share because I don't have a ton of knowledge on it. But there are ways to optimize this, and I've optimized it just manually by continuing to improve my edge day after day. Journal, take notes, understand what works for you and what doesn't. And, I would totally recommend my model to try. Now, I'm not a financial advisor. If you have your own system that works for you, keep going, keep pushing. That's awesome. I just love how mechanical my model is, right? It's 4 steps: sweep, tap, inversion, momentum. They either all happen or they don't. You either have a clear draw on liquidity where the market needs to go or you don't. And when you can identify a system like that that's very black and white, it's either a yes, you have it, or no, you don't. That's what's going to set you up with an edge when it comes to finding consistency, right? Because if you have a system with a defined criteria like that, then as long as you have the discipline to follow it, which I get for some people is harder than, like easier said than done. But if you develop that discipline to follow it, if you have a system that cut and dry, you are going to be able to succeed in this market, right? That's kind of what I wanted you guys to take away. So I appreciate you all for watching. I hope this helped you guys understand my system. Helped you guys see how I, make money trading and make profits using this system. It's very consistent. Like I said, just today, in the past 24 hours, 3 very clean models. You could even, I guess, probably count this one right here, right? Just continues to work. And it's all because it's kind of just fading the public, right? When you really think about it, it's like a reverse opening range breakout, right? You have this breakdown right here. People think we're going to break down at the opening range and boom, reversal. So, I just like to use inversions in ICT to materialize and kind of explain this model because that's what works best for me. And it works best for a lot of people who use this model. But at the end of the day, the best way you can describe the STIM model is just buy low, sell high, right? Sell high, buy low. You're buying low right here, right? You're at the discount of this range, okay? That's when you're longing. Oops, I accidentally put the risk reward calculator instead of the fib. So, right, you're in the discount of this range, and that's when you're finding the best longs. And then you go back up into premium. And when you're in premium, you look to sell. It's a very simple concept, but a lot of people fail to grasp it, and that's why a lot of people just don't really do well with trading. So, with that being said, like I said, I appreciate you guys all for watching. If you're still watching this video, you're serious about trading, I'm guessing. So make sure to like, subscribe for more educational content, and click the link in my YouTube bio to join my free trading Discord, completely free of charge. I, host it to help you guys be better traders, to help you guys see what I'm seeing in the market. And sometimes I even go live and trade there for you guys. So if that interests you, hop in. No credit card, no email needed. Literally just click the link and you're in. But yeah, I appreciate you guys all for watching. Peace.